The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX index here on the hourly chart like we usually do. And as you can see here, we are breaking into new low ground. It does have some, bearish bias here, but this has been going down for quite some time. We'll take a look here. By the way, we were going to have Bill Meridian on today from Cycles Research out of Vienna, Austria. However, he's in a travel configuration now, so he's not able to be on the show today, but we're going to have him on Tuesday. Tomorrow, we're going to have Shane Smolian of wolftrader.net on as our guest. We're going to take a look now at the daily DAX. So that you can see here, this is very important, folks, because if you look at this DAX, we just completed, if you'll just give me a second here, we just completed a beautiful ABCD structure at the 382. You can see the one that we had up at the 61% retracement, and now we've had one at the 382. This tells us we're going to go down another 400 points to the 11,750 level is what it looks like, and we're almost ready to take out those lows of July. So that's going to be, very interesting, phenomena. Well, at least early July. Let's try late July. What is it? It is July. That would take the whole thing of July out. Yeah, that's right. So that would be a very bearish formation. But we think we might have made a high up here, given the fact that we had such a big move down. Someone's asked me, was this all caused by, astrology? Hey, folks, I don't know what causes what. I'm looking at these patterns, and I look at the ratios, and I look at the astrology, and I take my best guess. I don't know what causes it. I really don't. I don't think anybody else does either. But when it fits together, sometimes it works better than any other time. So we'll watch it. But anyway, it's starting to line up, like we had hoped. So that's the main thing. If we do want to talk just a tiny bit about the IWM, because this is the one that we focused here on Monday. Here we are coming into Thursday. We were looking for the market to rally up to the 38% retracement level, folks. This hit it spot on in that 141 and change level, and then turned around and now gives us a target of at least 136 on this down move, if in fact that's what we're looking at. So that's neither here nor there, but if we get it, that's what we would be looking at. I think it's an important pattern to keep in mind, and we'll go one step at a time as we look at some of these things. One of the big questions that we're having this morning from most of the folks is this really a valid breakout in the gold market? We're going to put up the gold chart as we were looking at it just the other day before the big problem with North Korea. And you'll see that we did stop at the 786, but after we had that pull down in the 786 level, this market stopped pretty much spot on at the 61% retracement yesterday. I mean, it was down $17 from the high. Hold on, let's get this up here, and you'll see that it made a beautiful 61% retracement. That was the first, second, third Gartley that we've had here over the past 3 times, and it's worked, and now we've gone up and made that 1.27 expansion. Bill Meridian sent me a special thing for today's show since he couldn't be on, and I wanted to share it with you because, he's been pretty good on some of these things. In fact, he was looking for this mark at the top sometime in this area between late July and early August, but he thinks that this breakout we're having in gold is going to be a false breakout. He's going to explain this to us on Tuesday, but this is one of the things that he's looking at, and so he'll give you more information on it with his cycles and other stuff. but he alerted his subscribers with a special report today that not to follow this breakout in the gold market. It's better to wait and see what happens. This can change daily, folks, because, if the guy from Korea becomes a Republican, maybe everything will back off. But I don't know. I think that they're just jawboning. I really don't know what they're doing over there. They've been doing it for so long. Why would they do any different? The United States has never done anything but bend over. And, it started with Clinton and continued on. So we'll see what happens. But they can't continue the way they're going because they're getting to go between a rock and a hard place. So that's another one that we want to remember, because these things do change, in a heartbeat. Let's take a quick look at something here that's happening right now. Here's one of the ones that we were looking at last night and for today, and we'll put this up here, take a look at it. This happens to be the sweet crude market, and you notice that we have several ABCD patterns coming here, attempting to get back to this level of the August highs. But we have several of these coming in that measure up to the 50-12 level. That's a 78% retracement. It's an ABCD pattern, a 1.27 expansion, all of those levels. Now, we could easily break out above 50-50 and head to 5100 today, without any trouble at all. But that's what this little pattern looks like, at least from a short-term basis, in the crude oil market. One of the questions that someone asked me about some of my stories about my time on the Merck floor, this will fit in really nicely with what's happening in gold. It was September 1st, 1983, and I was in the gold pit standing next to Byron Tucker, who was talking to the lead order filler in gold, Maury Kravitz, who was his friend, and we were just chatting, and I had a 3-lot to sell in the gold. And what I did was I had my hands, I didn't like to go into the pit very often, and I just started, been there about a year. So the only time I ever went in there was very, very rare. So I was trying to do a 3-lot, and one of the guys from Jim Kalinis's group came over and started to get in my face trying to sell me a 10-lot of Christmas gold. And I didn't want a 10-lot. I only wanted a 3. So he wouldn't fill 3. He only filled 10. And I turned and I said to Byron, I said, God, this is annoying. He said, fill him on 10. And I said, I don't want a straight 10. He said, you can afford it. So I said, okay, sold. And so I sold 10. And so I said, oh, God, I got to go put a stop in. So I walked all the way back to the Lind Waldock desk, which was over where the meats were. That was about a block away in the Merck floor. And as I was walking, the whole Chicago Mercantile Exchange erupted. And the Korean airline had been shot down by a Soviet fighter jet as it was over I believe over the Alaskan Islands or someplace like that, and gold just went nuts. It went up. The limit on gold at that time was $50, and it was up about $25 in a matter of minutes. And I hadn't even got back to the desk to put my stop in, so I'm looking at 25 large as a loss. And I froze for just a second, so I said, okay, what am I going to do? And I went to the pit. I said, I'm going to take a deep breath here and see what happens. I looked at my charts, and I said, well, it shouldn't get above, I remember I sold it at 414 or something like that, and it shouldn't get above 433. And I was looking at the board, and it was trading at around 430. I'll be right back, and I'll finish this story in just a minute. 877-927.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, I'll finish the story about being short the gold on September 1st, 1983. I'd looked up, I believe the high was around, I don't remember the exact price, it was 430 something, maybe 439, something in that ballpark. I was out 20 bucks on a 10 lot, which was 20 large. And so I took a deep breath, and the market had been in a downtrend. You know, we had gone from 800 down to 400 and rallied back a little bit. And so we were still in a strong downtrend, and I saw the high. And so by the time I had caught my breath, gulped a few times, and said words to the police, why is it me? Something like that. Gold had dropped $9. It went from $21 higher. Now it was only $9 higher. And I said, uh-oh, this could be a reversal. So I held the order. I had my buy stop in my hand. Instead of giving it to Reggie to put in the pit, I was just going to hand it to the broker himself because I'd be standing next to him. I walked back to the pit, the gold pit, which, like I said, was about a block away. And by the time I got to the gold pit, it dropped another $4. So now it was only left $4 on the day. And I said, oh, this could really be good. And it kept dropping and dropping and dropping. So I walked up into the pit. Byron was still there, and he was going nuts with some scalping and stuff. And I still had this 10 lot in my hand. And I went up to the broker, got really close to him because I saw what was going to happen. And I said, uh-oh, I'm just going to see what's happening here. It broke. It got down below my price. So I went from minus 20 grand to plus 3 grand. I covered it $9 lower for an $18,000 profit. And I acted like, nothing really happened. I just took the buy, and that was it. And, I quit. I walked out. I quit for the day. I walked outside. I walked all the way back to McClure Court where I lived. And I stopped at the little church there and said a little prayer, for the 270 people or something that died that day. But that was one of the craziest things. But trading-wise, it was by far the craziest thing that ever happened to me in the 3 years that I was down there, on the floor. But it all happened in a period of about 10 minutes. So just because something happens, doesn't mean that that's the way it's going to be. And especially when we're listening to what's going on with all the rhetoric that's being bantered about in the press about everyone. So I frankly don't think they're going to do anything, because I don't think these people are stupid. I think they're devious, but I don't think they're stupid. And they know that if they do that, that's going to be their end. And their biggest problem is how China is going to react. But, let's get off that. Okay, let's take a look at a chart that's really getting ready to take a big dip, folks. Remember, we've always talked about Dr. Copper. Let's take a look at what's really happened to copper, over the last 7 years. We topped in copper up around $4.50 a pound. We came all the way down to $2.06 a pound. In fact, it went a little bit below $2 a pound, as a matter of fact. And now we're rallying back. We're making a 38% retracement of the high from 2011 if we get to 296 and change. And that's going to be a real interesting one to look at. If you're going to have to bear with me 1 second, folks, because my beepers are going off, and that's what I wanted to hear. This is good, so hold on here 1 second, and we'll watch some of these others. But if you'll keep an eye on this copper up at this 296 level, because it could, this 297, I believe, is the exact 382. There's a beautiful 78% retracement off the high in 2014 and a 61% retracement from the high of 2013. And remember, this is nothing more than a 382 retracement, of that whole move that we're looking at down here. So pay close attention to that. That's going to be a real interesting one, in my opinion, to really watch. We've got the Dow down about 70 right now, so that's going to be an interesting one, to keep an eye on also. But we'll watch it very, very closely here and see what happens to what's going on. Okay. All righty, we're going to be watching here. Okay, the people, this market's really not acting that bad, considering we're almost at war. I mean, it really isn't. So this is going to be a very interesting thing to keep an eye on also. So we'll see what happens here as we go through the rest of the day, and we'll watch and see what's going on. Okay, now let's get back to the overall market here. Let's see. We've got the gold is still up about $12-15 bucks. Let me see what it is, about $12, approaching to $12.95. Now, Bill Meridian doesn't think it's going to get above $12.95. That's his 2 cents worth. We'll see if that's going to be the case. He'll be back on Tuesday to be on the show, but that's what his parameter is looking at this is. We're looking at a potential in gold to have a reversal. Now, I frankly think above $12.95 was a valid breakout, but that's my opinion. I'm just giving you what his opinion is. But it certainly looked like it was going to be a valid breakout as we went above that old high at $12.85. We're trading roughly $12.92 right now, so that certainly looks like a valid breakout to me. And also, the silver market has broken out to the upside quite a bit also. It had a really big move here. Let's just look at it as of last night. This is right before the breakout. And we'll put this up here, and you'll see that silver at the 17 level, 16.95 was the old high. We took that out, and we've been up to 17.30 already. So, that's a good $1,500 above the breakout level. So you certainly have to consider that as a breakout also. So I don't know if $12.95 is going to stop the gold or not, but that's what we're looking at here early this morning. But like we say, it's still a bit early, and there's a lot of things can happen during this early part of the trading day. The other one that we've been really talking about for a very long time, of course. I want to show you this, folks. I want to show you the relationship here between since we were talking about copper, I want to show you the relationship here that we have in copper, where the blue line that you see there, that's the S&P 500, and look at the price of copper. Now, there's a very strong correlation you can see from 2016 to where we are right now, but look at 2015. There was a correlation there too. It wasn't nearly as clear as this one, but the market was basically flat. It did come down. They bottomed both together in September, and now we're coming into this big 382. This is not a bullish chart long term in copper, folks. There's just not any way that you can see that as a bullish pattern. That's at least the way I'm looking at it. Where copper's down about $1.60 today. When you've got gold up $11, you've got silver up 35 cents, you got platinum up $12, and copper down $1.50. So maybe that has already happened. We don't know yet, but we'll have to wait and see if that's going to be the case. So just remember that this could be something really dramatic happening in this copper market. Not now, but maybe soon. So we'll just keep it on our watch list as something that's interesting. I'm going to have a real interesting story for you when we come back from the break from someone from Japan. Is one of my students from quite a few years ago. He sent me a really nice letter about he had finally turned it around. It took him 5 years. He said 3 years of losing, then he worked with me for a couple years, and then after the last 18 months, he's been very successful. I'll share that story with you when we get back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I was talking about the gentleman from Japan. He sent us a chart that I think you'll be interested in. He's done some work with WD Gann, and he wanted to share this with me, and so I'm going to share it with you. look at the GAN lines, the fan lines, the 45-degree lines. But hold on one second, please. As you can see, we hit some major, that blue line up there is that major Fibonacci expansion. It's equivalent to that ABCD structure. And this goes back all the way to the low in the market in 1932, folks, in July of 1932. Whether this means anything or not, I don't know, but I did want to send it along because it does look pretty as far as symmetry and following the ratios and the patterns that we look at. But remember, that's really all it's doing is just following patterns. This has nothing to do with the fundamentals. And we certainly, we don't follow fundamentals because we are technicians. That's why when we're seeing all this news that's going on out in the world, that you take it with a grain of salt or tongue in cheek, because we don't know what's going to happen, but nobody else does either. And so that's one of the reasons why you want to play, pretty close attention to these markets as they do jump around quite a bit. So let's just remember that's what we're here for. So we'll just keep that in mind as we go. Now, we just made a 78% retracement of the whole move in the NASDAQ in a matter of about 1 minute. And it's already jumped, 7 points. I don't know if that's going to be a low today, but that's a very positive candle for the NASDAQ. And it came right at the 78% retracement of that whole move from the low up to the high at 1521 and then back there. So as long as, if we don't take that out, that means this probably has maybe a positive bias. Well, we're almost back down again. It's so crazy, so I better shut up. Okay, let's get back to the grain markets here for a little bit. We've had a pretty good move in beans. They've rallied, well over 20 cents off of the bottom. But frankly, with the market in the state that it's in, 20 cents is not very much from what I was thinking it was going to do. So pay a little bit of attention to this because we really need to get the November soybeans above that 985 level. That's a really important spot to look at. I've already gotten 2 questions about Bill Meridian's comment about gold's breakout. Bill said in his update that he did not believe that the December gold was going to close above 1295 is what I recall. So keep that in mind as we because he's wrong like we all are at times, but he's a very smart guy and he's given us some great information. So watch it. We are in a time when we have tremendous amount of news, and it's instantaneous news, folks, because of CNN and all the other news events, Fox and the whole NBC and the BBC and everything else. News is instantaneous, so you're almost on the war front. So these things can change almost immediately from tremendous amount of veracity to all of a sudden they're having peace talk. So just be careful. Be careful at all times. That's the real key to this. Is you certainly want to be able to do that. That's very, very important. So I wanted to share with you because someone's asked me again, and I certainly will. This is the chart of that Bloomberg brought out about the seasonality of the VIX index, and I wanted to bring this up to you today to show you where we are. We've got down to this level here into July. This is when the seasonal low should have come in, and that should extend into October. This is basically the upside down version of sell in May and go away, and the possibility of the market bottoming in an September-October environment. That's basically what that is. We'll see if this is going to be too much, but we'll certainly watch that with very close importance. That's for sure. Now, one other thing that I wanted to bring to your attention here is the fact that when we had this big explosive move to the upside on the 9th of August, I wanted to show you what happened with Apple. You'll notice here that the Apple got up to the exact 1.27, and that was right near the 162 level. I think it closed around 159 and change, so that could be a very interesting one. I don't believe we're going to I don't think we're going to make new highs, but that don't mean we can't have a heck of a good rally, and maybe we will make new highs. I don't know because it's still close. You don't know what's going on, and we'll see what's happened, with this. Hold on one second. I have to place an order, and then I'll be right back with you. Okay, hold on. Hope I don't make a mistake. I have to charge you all for it. Hold on a second. Okay, there she goes. All right. All righty, there we go. All right, move on to the next question that we had, and that is about the use of stops. Folks, the thing that you want to remember when you're using stops is you have to find something that fits within the parameter of your trading. Remember, you got to want what the market wants. If the market wants to go higher, it's going to go higher. And if it wants to go lower, it's going to go lower. And so you have to do is to fit your strategy within how much you're going to risk. Now, one of the things that I'd like to do that I posted before that I didn't go through the whole thing, and that is this this crude oil chart. And I just wanted to show you something on this crude. If you'll notice the little red boxes on the crude, folks, you see where it was down 88 pips from the high and then up 125 and then down $2 and then up 150 and then down 140, 123, 119, 125, 88. You'll notice that over the past 2 weeks, the harmonic number in the crude oil has been between 88 and 125 to 150. And the move up today was 150. So all that's doing is it's telling you that if the market goes $1.50 beyond where you want to buy it or sell it, you're most probably doing something wrong. And that's the real value of the harmonic numbers, is to use that as a place where you don't have to risk very much money. Because it's not about how much money you make, it's how much money you don't lose. And that, I think, is a very, very important thing, you know, to pay a great deal of attention to. That's a very, very important thing. That's, you know, we'll see what's happening. I don't know if the crude oil's backed off about 30 points, which isn't nothing. But if we make a new high today, this certainly would be wrong in my opinion. But we'll watch it very, very closely, of course. The Japanese yen is also down to near this old level again, this 109.50 level that's holding, you know, relatively well. So we need to keep a close eye, you know, on that as we go through and you know, watch this thing unfold this morning. So this is neither here nor there, but that's what we want to do, is to pay close attention to it, you know, as we see it unfold. That's the main thing. That's I think it's a very important complex. Hold on one second here. We've got to put another order in. Just a second here. I want to be able to do something here. Feed the family for just a second, and then we'll be done. Bada bing, bada boom. Hold on. Okay, that one worked out all right. Okay, hold on here. We're going to do a little scalping here as we're on the air. So hold on one second here, and we'll be right back with you. And we'll move on to the next one here. Okay. Okay, now I wanted to talk just a tiny bit about the cattle market, because we've had several people ask about it, and I posted the cattle chart. I hope I posted the cattle. If not, I'll have it at the break. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, the selling has intensified in the NASDAQ, and the rest of the market was starting to accelerate down. Look, that 786 number at 58.72 is violated, but if it's going to be violated by a whole lot, we'll have to wait and see. But there's a lot of support at that 58, 54 level. Taking that out is going to mean a market that's probably going to go down, a great deal more. So just keep that in mind as you're looking at some of these. The ABCD structure on that NASDAQ takes it down to the below 5,700. We believe that we've made a major top in the stock market here, and it's probably going to last for a great deal of time, just based on what we're looking at here. Now, I wanted to show you folks, we've been talking about cattle for quite some time here when we have Rich Anderson on the show, and I wanted to show you, what we're looking at earlier in the week, that we're looking to cattle to get down below that 110 level. You can see the ABCD structure there, and, cattle trade really good. I mean, it trades like, 1/100th of what the S&P does, but it's still a tradable market, and it does act, very nice technically. So as we look at this, you'll see that the market has reached that level now, and we should be getting support here at this 108 level in the cattle. That has completed the pattern. The difference is we've done really 2 hard days down with wide-ranging days, and that is usually associated with more movement to the downside. So the way you would handle this is you want to wait till you see a day where we have an inside day or a doji, if you wanted to buy cattle, to do that. You don't want to try to catch a falling safe in here, because that's what gets you into, a great deal of trouble. So just remind yourself that this is what you're looking at when you're seeing some of these things, that you're looking at something that could be really, really interesting from the long side if it does bottom, and we don't know if that's going to happen or not. One of the questions that one of my listeners are listening, asking, how much are these markets interactively coordinated with? Folks, some of them are and some of it aren't. You look at some markets, that look really good, and other markets that don't look anywhere near that good. So you just got to be really careful to determine whether the market is related to it or not. Like gold is not related to crude oil, but sometimes they're both up on the day. That doesn't mean that they're coordinated. John Murphy did a long-term study of intermarket relationships, and when they work very well, but when they don't work very well. So remember that that's one of the things that you want to remind yourself that's what you're dealing with here. So I want to move on to the stock market here, because we're down. How much are we down in the Dow? We're down over 100 now, I believe. Let's double check. We're pretty close to it. Yeah, we're down about 100 in the stock market, down about 57 in the NASDAQ, down 16. The key number here in the S&P that most people are watching is this 255 level. And that's nothing more than what we had happen here. Let's just bring this up and show you, where we are from earlier in the week. You remember we had that really tight trading range, and then we exploded to the upside at 287. We've dropped 30 handles in 2 days, and that means we're going to take out the bottom side of this. So that is usually a sign of a key breakdown of these things, folks. So that's a very, very important thing, to be watching. That's for sure. Now, like I mentioned before, there's going to be a lot of stuff that's related to the news. So, keep it in mind that once you hear it, that doesn't necessarily mean that's the way it is. That's the bottom line of what you're looking at here. So that's the main thing of what we're watching. So it's an important concept to remember, but that does happen, all the time. Okay, now let's move on to the Treasury bonds and Treasury notes. We're having what I think is a flight to quality rally. I believe there's still a lot of resistance up on these bonds at the 115 level, and whether we're going to see something occur as far as a breakout above that 156 level in bonds, which would shock me. But believe me, I get shocked a lot. But that's still a little early in the game to see if that's going to be the case. I got two more questions about gold, folks. I don't know whether gold has broken out to the upside or not. I really don't. The $64 question is if it gets above $12.95, that's a key level that Bill Meridian is looking at. He believes this is a false breakout from a reason for a lot of seasonalities that he's looking at that he's going to be sharing with us on Tuesday. But that gives us all day Friday and Monday. So that 2 days. 2 days in the gold market is 3 lifetimes for trading. So watch it. Watch it very, very closely. That's basically, the bottom line of, what we're watching here. That's the key, in my opinion. One other question now. About Apple. Folks, I believe the Apple has made some type of a major top here. I don't think it's going to get above the 163 level, but, it certainly do that. That's an easy thing for to see it happen. But we'll have to let the market tell us. But the way the market is acting, when we broke out to 287, 2487 in the S&P, and then reversed in 2 days 30 handles. 30 handles isn't very much, but it's starting to move in that direction at a time when it's supposed to, with the Bradley model and everything coming together. We'll just put this up. And remember, the Dow was up 11 days in a row, which in itself was a outlier event. So all of these things are telling us that we're most probably heading down, to these levels. And many of them are drawn to these stop levels, folks, just because, you're seeing prices go above certain numbers. That's just because of the algorithmic trading and automatic trading that they have in the market these days. Those are the main things that you're fighting with as you look at some of these things unfold. That's the bottom line when you're looking at some of these things. So just keep in mind that the markets do reverse, as we've seen before. And I'm not saying today is going to be reversal day. All I'm saying is to watch it very, very closely, because this is all news related. And the news sometimes is a bunch of baloney. And you know what baloney tastes like when you don't put mustard and ketchup on it. So, boy, that was short, corny enough. I must be struggling for words in here, but that's nothing new here on the show. So we'll see what's going on. Okay, one other question was about the VIX index. I've already covered that. There's a strong seasonality for the VIX to rally from August through September and October. It started in that direction, which I thought was going to be possibly a really good trading opportunity. So far, it's acting okay. Even when the market was going up, the VIX was not acting badly, folks. It really wasn't. And that goes back to the story that if the markets don't go up, on good news, they only have one place to go. And then, of course, we had the bad news come in about the Korean thing, and whether that's going to mean much or not, we'll have to wait and see about that also. So keep in mind that that's something that we'll be looking at very, very closely here in the stock market and the VIX index here over these next few days as the news filters in about what's going to happen. I believe not much is going to happen because, like I said, I don't think those people in North Korea are stupid. I don't think they're as smart as we want them to be, but I don't think they're stupid. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to share the chart that we got from Kevin Murphy this past week, showing the time frame of early August as a potential high, and so far whether that has been it or not, I'm not sure. He was looking for August 8th, and of course the high was made on August the 9th. But what's important here is the fact that the ratios of the patterns that are there all line up with the Fibonacci summation series and the numbers of sacred geometry. So I think that that might be it, but we don't know for sure. You really need to close below 24 40, I believe around 2440 in the S&P, that would certainly institute a downtrend. But again, this is technical stuff, and not many people believe in technical stuff. So it's amazing. By the way, one of the interesting things from Bloomberg, along with that VIX index chart that we had, is they talked about the valuations. And here again, that's a wide range of opinions that people have on valuations, and they certainly change a great deal. That's why I just look at the charts, folks. The other stuff is just so far over my head, and I've got a pretty good education, and I still don't understand it. So that's it. Paul Samuelson came to Indiana University many years ago, back in the early '60s, to talk to our MBA class, and he said you'd learn more about trading if you sold one contract short of soybeans. He said that would tell you more about what economics is all about than these 2 years that you're going to spend in the MBA program. And that's basically the school of hard knocks, folks. And that was the learn by doing, and that's absolutely that was absolutely the case. So I had many different degrees in soybeans or in MBAs from the soybean market over the years, but over the years they've been really good to me, so I have no complaints. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.